Hello everyone. I am Shalini Singh, Assistant Professor in Department of Commerce at GEMS Engineering Management Technical Campus, Greater Noida. Today, in this video lecture of Income Tax Law and Practices, we are going to study about the computation of incomes under different heads. This is the part of Unit 3, first content, in which we'll discuss about the computation of total income under section 14, subsection under section 14, 14A, 28, 288A and 288B. So this is the lecture 1 of Income Tax Law Practices of Unit 3. Let's begin. What is the meaning of total income? As per section 14, all the income for the purpose of charge of income tax and computation of total income are classified under different heads of income. So in this computation of total income, we'll be discussing the total income is calculated on the basis of the incomes charged under different heads. That is, income from salary from section 15 to 17, income from house property from sections 22 to 27, income from profits and gains of business and profession, section 28 to 44DA, income from capital gains, 45 to 55A, and income from other sources under section 56 and 59, 56 to 59. So, if we talk about income, as I told you in my first lecture of income tax, whatever we earn for our needs, that is the income. Now, why is the classification is done in different heads? Although there is only one tax that is on the income that is calculated under various heads, but there are different rules for the computation of the income under each head. And income has to be computed under that head after applying such rules only. And there is no deduction in this case, that is no deduction for expenditure incurred in respect of exempt income against taxable income under section 14A. So for the purpose of computing the total income under these 5 heads of the income, no deductions shall be allowed in respect of the expenditure incurred by the SSC in relation to the income which does not form the part of total income under this act, that is exempt income. So dividend income received by a shareholder is totally exempt. Therefore, any interest or any other expenditure incurred for earning such income shall not be allowed as a deduction. So that is not a part of deduction. What is the method for allocating the expenditure in relation to exempt income under section 14A, subsection 2 and rule 8D? So number 1 is where the assessing officer is satisfied with the correctness of the claim. When the assessing officer, having regard to the accounts of the SSC, is satisfied with the correctness of the claim of expenditure, or he is satisfied that no expenditure has been incurred for such exempt income, no further action is required by the SSC officer in this regard. And secondly, when the SSC officer is not satisfied with the correctness of this claim, then in this case, SSC officer shall determine the amount of expenditure in relation to such income in accordance with the a few rules. That is, expenditure in relation to income which does not form the part of total income shall be the aggregate of the amount of expenditure directly relating to income which does not form the part of total income, and amount equal to 1% of annual average of the monthly averages of the opening and closing of value of investment income from which does not or shall not form a part of the total income. However, the amount referred to in clause 1 and clause 2 shall not exceed the total expenditure claimed by the SSC. Now, let's understand how we'll calculate this total income. So basically, the total income is your gross income from all the sources, then all the gross income from the different 5 heads. Then there are certain deductions which are reduced, such as expenses or allowances and reliefs. These are the deductions that is not taxable, that is totally exempted. These are the deductions. And if you are a married or in a civil partnership and jointly assess your spouse or civil partner's income included in the total income. And if you earn deposit interest or dividend income, you must use the gross figures when you are calculating the total income. Then what are the steps in the calculation of the computation of total income? First one is, so the step is in which the total income, the step in which the total income for any assessment year is determined is, number one, to determine the residential status of the SSC to find out which income is to be included in the computation of his total income. Secondly, classify the income under each of the following five heads. Compute the income under each head after allowing the deductions prescribed for each head of the income. So this is the method of computing your total income. That is, what is the total income? If you define under section 2 subsection 45, that is the gross total income which is computed from different five heads, these five heads, and deducting all the deductions permissible under under section 14A of the Income Tax Act. So deductions under sections, all the deductions which are permissible under section 80C to 80U is known as your total income. So this is your total income, which is computed after calculating the incomes under these five heads and deducting the then allowing few deductions under section 80C to 80U. That is your taxable income. So what is this procedure, how it is calculated? And number one, we have income from salaries. So income from salary includes salary, bonus, commission, etc., or taxable allowances, value of taxable perquisites, gross. Then it becomes your gross salary. Then from this gross salary, we deduct deductions under section 16, which is permissible. Then your net taxable income from salary is earned. Then in the second earned income is income from the house property. So income from house property and net annual value of your house property is calculated. Then deductions under section 24 is reduced. Then comes your income from the house property. In third head, we have profits and gains of business and professions. So net profit as per profit and loss account is calculated. Then if we need to less or we need to add adjustments required to be made to the profit as per the provisions of Income Tax Act, then we gain the net profit and gains of the business and profession. Then it gives us the profit and gains of business and profession. Then in next head we have income from capital gain. Capital gains are computed. Then exemptions under section 54, 54B and 54D, etc. These exemptions are reduced. Then income from your capital gain is received. Then income from other sources includes the gross income. Then deductions allowed, it is reduced. Then net income from other sources is received. Then the gross total income is the addition of all these five heads and deduction available under section 80C and 80U is reduced. Then comes your total income. This is how we calculate the total income of the individual under section 14 of the Income Tax Act. So basically the income, these five heads of incomes are calculated so as to compute the total income of the, that is the gross total income of an individual. So that's all for now. And the next lecture we'll discuss about the different heads. Thank you.